Every 4 years, something extraordinary happens in the world of Bitcoin. It's not an event announced by a government or a financial institution. It's not a conference or a speech. It's a moment quietly written into the code itself, an event that changes the economics of an entire global network. It's called the Bitcoin Halving. For most people, it sounds technical, maybe even boring. But those who've been here before know that the halving has the power to reshape markets, create millionaires, and shift the narrative of what money means in the digital age. In the past, every halving has been followed by a storm of hype, of disbelief, and of unprecedented price movement. Bitcoin's supply gets cut in half, scarcity increases, and history tends to follow a pattern that feels almost mythic. But here's the thing. This next halving, expected in 2025, might be unlike any we've ever seen, because this time, the world around Bitcoin has changed. Think about it. When the first halving happened back in 2012, Bitcoin was a strange experiment, known only to tech enthusiasts and a few early adopters. It traded for around $12. By the next halving, in 2016, it was climbing towards $600. In 2020, right in the middle of a global pandemic, Bitcoin crossed 60,000. Every cycle brought in new believers, new skeptics, and new stories of people who either changed their lives with Bitcoin or missed out completely. But what if the next halving doesn't follow the same script? What if the forces shaping Bitcoin today, massive institutional investors, AI-driven trading, government regulation, global inflation, and the rise of digital assets have completely rewritten the rules of the game? That's what this video is all about. Understanding what the halving really means, how it affects Bitcoin's price, why it exists in the first place, and what could make this upcoming halving the most unpredictable one yet. Because the truth is, most people talking about the halving are focused on the price, but the halving isn't just a market event. It's a coded reflection of how Bitcoin sees money itself. Every 4 years, the reward that miners earn for validating transactions is cut in half, less Bitcoin is released into circulation. That means fewer new coins are entering the market, but the demand, if it stays the same or grows, creates upward pressure on the price. It's basic supply and demand, but written into a decentralized network that no single person can alter. This idea of controlled scarcity is what separates Bitcoin from every other currency on the planet. Governments can print more money, central banks can inject liquidity, but Bitcoin, its schedule is locked in. It's as if the rules of nature were programmed into digital form. And that's why every halving feels so powerful, because it's not just about economics, it's about trust, code, and time. But here's the twist. This time we're entering the halving with completely different conditions. Bitcoin is no longer an outsider in the financial world. It's becoming a recognized asset. Big banks are investing. ETFs are approved. Governments are drafting laws around it. Miners are operating at industrial scales. With data centers across the globe consuming massive amounts of energy to secure the network, the Bitcoin landscape in 2025 is professionalized, institutionalized, and more global than ever before. That could mean the next halving 1T produced the same explosive reaction as before, or it could make the reaction even bigger. Either way, it's going to be a defining moment, not just for Bitcoin, but for the idea of decentralized money itself. So before we dive deeper, pause for a second and think about what makes Bitcoin unique. It doesn't rely on trust in politicians or banks. It doesn't ask for permission to exist. It simply operates block after block every 10 minutes, day and night. And every 4 years, it quietly reduces its own reward, enforcing scarcity without anyone having to intervene. That's the genius of Satoshi Nakamoto's design. A self-regulating, transparent monetary system that operates on math, not manipulation. When the next halving arrives, millions will watch the countdown online, a digital clock ticking toward an invisible event that will once again remind the world why Bitcoin is different. The question isn't whether the halving will matter, it's how much the world will change because of it. By the end of this video, you'll understand what's really going on beneath the headlines. You'll see why halvings have shaped Bitcoin's destiny since the beginning, and what this upcoming one could mean for investors, miners, and everyday people trying to navigate the next era of digital money. Whether you're holding Bitcoin, thinking about buying it, or just curious about how it all works, this is the moment to pay attention. Because the next Having one T just test Bitcoin, it'll test everything we think we know about value, supply, and the future of money. The Bitcoin halving might sound like a complicated technical concept, but at its core, it's one of the simplest and most brilliant mechanisms ever designed in finance. When Bitcoin first launched in 2009, miners were rewarded with 50 Bitcoins every time they added a new block to the blockchain. This reward was how new coins entered circulation, and it was also an incentive for people to help secure the network. But built into Bitcoin's code was a rule that would change everything. Every 210,000 blocks, roughly every 4 years, that mining reward would be cut in half. That means 50 became 25, 25 became 12.5, and then 6.25. After the next halving in 2025, it'll drop again to 3.125 Bitcoins per block. It's like Bitcoin putting itself on a diet. Fewer coins created over time, until eventually, around the year 2140, no new Bitcoins will be produced at all. That's when the maximum supply of 21 million coins will be reached, and the entire system will rely purely on transaction fees to reward miners. This halving mechanism isn't random, it's the reason Bitcoin is scarce. Every other form of money in history has been controlled by someone: governments, central banks, kings, or corporations. They could print more whenever they wanted, changing the supply and therefore changing the value. But Bitcoin doesn't work that way. It's predictable, transparent, and immutable. Everyone knows when the next halving will happen, and no one can change it. That's why Bitcoin is often compared to gold, except gold miners can find new deposits, while Bitcoin's supply schedule is locked forever. Each halving is a moment when the world is reminded that this system plays by its own rules. And as simple as that sounds, this one rule has had massive ripple effects through history. When the first halving happened in 2012, hardly anyone cared. Bitcoin was a tiny experiment, a digital curiosity trading for around $12. But then something happened. As supply dropped and demand slowly grew, the price exploded. Within a year, Bitcoin was worth over $1,000. The people who had been mining or buying early suddenly saw life-changing gains. It was the first proof that this digital money had teeth. Then came the second halving in 2016. By then, Bitcoin had evolved. Exchanges existed, more people understood it, and media coverage had begun. When the reward dropped from 25 to 12.5 Bitcoins, Bitcoin was trading near $600. A year and a half later, it nearly hit 20,000. The second having created a wave of new believers and an even bigger wave of hype. And then came 2020, the third halving, in the middle of a global pandemic. The world was printing trillions of dollars, economies were shaking, and Bitcoin quietly cut its new supply in half again. This time the price at halving was around $9,000. Within a year, it rocketed to nearly $69,000. That's 3 halvings, 3 massive bull runs, and a clear pattern that captured the imagination of millions. But here's the thing. This upcoming 2025 halving is different. Bitcoin is no longer a fringe idea or a rebel currency. It's becoming a part of the mainstream financial system. Major institutions now own Bitcoin. Governments are experimenting with it. Massive funds and ETFs are buying it. That changes the dynamic completely. In 2012 and 2016, retail investors, everyday people, drove the price action. Today, the market includes hedge funds, corporate treasuries, and long-term institutional players. These aren't people making emotional trades, they're strategic. Long-term investors with deep pockets and data-driven decision-making. That might mean the halving's effect on price will be slower, steadier, or even more dramatic if large players begin to accumulate in anticipation. Mining has changed too. It's not a hobby anymore, it's an industry. Early miners used laptops. Today we have industrial-scale mining farms with thousands of machines running non-stop. These operations spend millions on equipment and electricity, which means the halving will directly cut their revenue in half overnight. Some miners will adapt, others will shut down. It's a constant cycle of competition that keeps the network strong but also introduces risk. If too many miners quit, the network could temporarily slow down, but historically, it always balances itself out. The economics are brutal, but efficient. And this is part of what makes Bitcoin fascinating. It's like a living organism that keeps adapting every 4 years. Now, let's talk about the real reason halvings matter: supply and demand. When the number of new coins entering circulation gets cut in half, the available supply on the market tightens. If demand remains steady or grows, basic economics tells us prices should rise over time. But that's not the full story. The halving doesn't cause instant price explosions. It's more like a delayed fuse. After the 2016 halving, it took several months for Bitcoin to start its bull run. After the 2020 halving, it took almost half a year before prices started breaking new records. What really happens is subtle. Miners who used to sell part of their rewards to cover costs suddenly have fewer new coins to sell. The selling pressure drops. Combine that with increasing demand from institutions, from ETFs, from global investors looking for an inflation hedge, and you get the conditions for a squeeze. Less supply, more buyers, rising prices. But here's something most people miss. The halving isn't just about price. It's a test of belief. Each time the reward is cut, miners, traders, and holders face a new question. Is Bitcoin still worth it? Is the network strong enough to survive on less? And every time so far, the answer has been yes. It's part of the magic of this system. It keeps proving itself one block at a time. The halving enforces discipline, forces the market to evolve. It rewards patience and punishes greed. That's why those who hold through multiple cycles often end up ahead, not because they got lucky, but because they understood the rhythm. Smart investors aren't just watching the calendar, they're watching the data. The hash rate, which measures the total computing power of the network, shows miner confidence. If it keeps climbing after the halving, that means miners believe Bitcoin's price will rise enough to make their operations profitable. Exchange reserves are another clue. When people move Bitcoin off exchanges into cold wallets, it usually means they plan to hold, not sell. That tightens supply even more. Then there are institutional inflows, like ETFs and corporate investments, which can absorb millions of dollars worth of Bitcoin at once. When all of that happens alongside a halving, the pressure on supply can get intense. At the same time, there's a bigger picture here. The halving is like a mirror reflecting the global economy. When traditional systems are inflating and trust in fiat money is fading, Bitcoin looks stronger. When governments print trillions to solve crises, Bitcoin quietly keeps its promise of fixed supply. Whether prices go up or down in the short term doesn't change the long-term story. The halving reminds us why Bitcoin exists in the first place: to offer an alternative to endless money printing and central control. It's a system that enforces fairness through code instead of politics. So as we approach the 2025 halving, remember this. The event itself isn't about hype or headlines. It's about the silent, predictable heartbeat of a decentralized system. The countdown, ES&T, just a timer. It's a reminder of how far Bitcoin has come. Each halving has shaped its history, tested its believers, and pushed its limits. And this next one will do it again, in a world that's watching closer than ever. Whether Bitcoin's price explodes or stays steady, one thing remains unchanged. The code keeps running. Every 10 minutes, a new block is mined. Every 4 years, the reward falls. And with each halving, Bitcoin gets a little more scarce, a little more secure, and a lot more legendary.